Trading psychology is a really important part of trading. How do you deal with good and bad trades? Let's talk about that and more right now. Hi traders, it's Andrew Mitchem here, the Forex Trading Coach, video and podcast number 262. Now, trading psychology, all about the mind. It's a really underrated and overlooked part of trading. You see, everybody wants to get into the nitty-gritty of the actual trading strategy and how to make money. But the reality is that good trading, a large part of it comes down to your mental approach. Because after all, we're talking about emotions. You know, we're talking about making and losing money, real money. And it hurts or it's fantastic depending on which side of the trade you're on. So let's talk about the two different approaches really. And also with the bad side, how I can give you some help and information from my personal experience to help you overcome that. So when you have losing trades, all of a sudden everything feels terrible. And you know what I mean, because you've certainly been there. All traders go through it. I still go through it after trading for years and years. But there are some things I can help you with. So when trades go wrong, you start to have doubt in your system, doubt in your own ability, and it just all feels horrible. You know, you see what you think are good setups and trades just go wrong. Because after all, trading is not an exact science. It's about probability. You know, so not all of the time are your really nice setups going to work, 100%. So you start having doubt, and some people then, especially newer traders, they start having anger, frustration, fear, all those type of things. Some people want to just get back at the market and they start doing really stupid things. You know, they'll take silly position sizes, they'll start doubling up of positions, they'll take a trade just because I want to take a trade and get my money back, all those kind of crazy things. And especially when you're new, that is something that is very easy to fall into. And take the opposite side of that scale, and you take a series of winning trades, and all of a sudden life's fantastic. You know, you're making money, you're seeing lots of profit. If you're using MT4, lots of green lights, you're hitting your profit targets, and your account's growing beautifully. The danger then is you can become like very blasé about your trading, very almost like indestructible, almost like that teenager mentality where, I can sort of drive a car really fast because I know what I'm doing and it's not gonna, it never happens to me, and it's a thrill, all those type of things. And we've all been teenagers, and many of us have teenagers as children, and you know that little bit of knowledge can be very dangerous, that kind of approach, and that can become the problem when you have some winning trades. Is that, the whole mental approach goes out the window because you just think that every trade you take is going to be a great trade. And of course, you know the answer, you're going to get hit really badly. So going back to the losing side of things, what can you do? Well, first of all, it's important to be mentally focused. It's important to be disciplined, to be trading at the same times of the day, to be trading the same setups, the same time frame charts. Whatever it is that you do, in a good run, do the same, because the market will always come back. It will always change. Maybe your strategy requires, the market to be trending really strongly, and right now the market's not trending strongly. Well, what can you do? You can you may not see very many trades, so you reduce the number of trades you take. You keep your risk per trade very low. You might want to look at different time frame charts. As an example, I sometimes go down to like a 4-hour chart, or if the 1-hour charts aren't producing very much, maybe go to a 6 or 12-hour chart. Because different time frame charts will show different type of setups and trends depending on the market conditions. Likewise with winning trades, well, this week I've had an amazing week. On my daily trade suggestions that I make for all of my clients on our membership site, we've had 6 out of 7 winning trades. And now by risking only 0.25%, 0.25% risk on each of those 7 trades, my clients this week, and we've still got 1 day to go, are up 2.8%. with extremely low risk, only 0.25% risk per trade, 2.8% gain. All they've done is spent probably 10 minutes in the first 4 days of this week just by looking at the membership site and copying exactly what I've taken and why. So it's a learning process there, you know. So winning trades, yes, it's fantastic, and we're up really well for this week. I'm up almost 5% for the week in total, you know, daily trades plus other time frame charts. And it's great, and I'm feeling really good about it. But it doesn't get to my head because, you know, I know that there will be weeks around the corner, maybe next week, that things aren't quite as good, you know, and you have a smaller winning week or you have a losing week. So consistency is the key. With my daily trades, ever since 2009, I've posted on my membership site every day with almost without fail. Unless I've been away or ill or something, you know, but almost every day since 2009, I have posted the daily trades at exactly the same time because I work off the 5 p.m. New York close of day. So it's consistency. You know, I make a massive effort, doesn't matter where I am in the world or what I'm doing, I will always post those daily trades on that membership site because I like to take my trades based off that 5 p.m. New York close of day chart. So consistency is important. The amount of risk you take is important. The type of setups, I'm only really looking for 2 types of setups on the daily charts. I'm looking at a continuation pattern or I'm looking at a reversal pattern. It's really, really simple. If I don't see those, if I see just the market going sideways, indecision candles, etc., move on to the next currency pair because there's nothing to take. Don't trade just for the sake of trading. So it's really important that you have consistency, keep your emotions under control. Don't get too excited when things go really well. Don't get too down when things don't go well because the market will always change. And have confidence in your ability and in your strategy. And look at the bigger picture. You know, don't just think, oh, what happened this week? Oh, no, I've had an awful week. Or fantastic, I've had a great week. Because it's more about what happens this month or what happens this quarter. You know, or what happens this year. Because you will get ups and downs. Doesn't matter how good or bad a trader you are. You know, you might think you're the best trader on the planet. You're still going to get losing times. So it's really important to have consistency, control your emotions, and of course that, like a lot of things, comes going back to the driving the car analogy. And it comes with experience. So you can't expect to be a brand new trader and have all these emotions under control and things because it takes time. Like anything good in life takes time to master. But stick at it and you'll find that with consistency and confidence in your system and yourself, you'll have fantastic gains. If you need help with any of that, just email me, andrew@theforextradingcoach.com, or use any of the links, the contact links on my website, and I'll be pleased to help you. So this is Andrew Mitchem, the Forex Trading Coach. Have a great weekend. I'll see you this time next week. Bye for now.